Hello and Namaste everyone. I, Advocate Ravneet Kaur Garewal, welcome you all to the channel. Today we will be discussing about GST implication on common area maintenance in housing societies. In this regard, we have CA Sanjeev Goel with us to deliberate and enlighten us on the subject.
Namaste everyone. You have raised a very important topic about GST implication in housing societies. This lot of ambiguities are associated with this topic, and hence a detailed deliberation on this topic is required for benefit of all of us. And most of us are living in housing societies, so it has implications somewhere or the other in our life.
True.
So tell me, what you would like to know.
So firstly, tell us about the cooperative housing societies. What is it and why is it formed, and what is the difference between a cooperative housing society and a residential welfare association? We have two parts, so what is the difference and what are these?
Yeah, this is important because in order to understand the GST implication of housing societies, we need to understand what is cooperative housing societies, which is known as CHS, and resident welfare association, which is RWA. So if you see most of the circulars or most of the case laws that we have seen from Maharashtra, from Tamil Nadu, those are related to cooperative housing societies. Now the major difference is cooperative housing societies own the assets. The properties are owned by cooperative housing society, and being a shareholder or a member of the cooperative housing societies, you are entitled to stay in one of the units in the cooperative housing societies. Whereas in case of resident welfare association, the property is owned by the owners, by the residents themselves, and for mutual benefit of all, there are certain common area expenses which has to be met by all. They form a resident welfare association who takes care of the maintenance of the common area in the society. So this is a basic difference between the two.
So the second question that I would like to know about from you is, the common areas in every society are maintained by housing societies, for which the residents pay a lump sum amount to the housing societies, and these are collected by the common area maintenance charges known as CAM. Okay, so are these services provided by the housing societies taxable as per GST law?
Yes. As per Section 9 of the GST Act, these services are taxable. Now, there is a notification number 12 by 2017 issued on 28th of June 2017, wherein the government has provided that common area maintenance up to 7,500 per month per unit will be charged at nil rate of taxation. So the government has exempted these services from the differential of tax rate, which was prescribed under Section 9 and prescribed in the notification. So, and there is a clarification issued by the government in this regard, in case the common area maintenance per unit per month exceeds 7,500, then in that case GST will be levied on the entire amount, and there will be no benefit will be provided up to 7,500.
Right.
So there can be a situation where a housing society is having a LIG, MIG and HIG category of houses, where in certain houses there will be common area maintenance up to 7,500 or below per month per unit, whereas in certain units the common area maintenance will exceed 7,500 per unit per month. In that case, in those units, the entire common area maintenance charge will be levied at the GST rate applicable, which is 18%. As per the notification, there are certain services which are provided by the central government or state government or any local authority, which are exempt from GST. Hence, housing societies who are charging common area maintenance from the resident owners, they have to bifurcate the same into exempted services and non-exempted services. And this 7,500 threshold limit will be calculated after taking into consideration the exempted services.
Okay.
So if the housing society is charging X amount of money per month per unit for maintaining the common area, so from there they have to deduct certain services, the charges towards certain services, and then they have to arrive whether it is 7,500 or below or above. So these services are like electricity, property tax, water tax, etc., which are provided by central government, state government or local authorities. So these are exempted. Now the question is that there can be, these rates are variable. So every month you have to calculate. So at times you can, on the basis of the last audited balance sheet, you can calculate a figure on a per month basis and you can deduct that amount for the purpose of calculation. And in the last quarter, or say in the month of February and March of the financial year, you can do an actual calculation and you can adjust the differences if any.
So and another thing that I've noticed is like in certain societies, the LPG is supplied through pipelines, right? So like the owners that are availing like LPG, domestic LPG through pipelines are billed by RWA on the basis of unit consumed. Is that taxable?
Yeah, this is a very important question and there are ambiguities associated with it, and there are certain advanced rulings also against the SSEs. So what it is like that, see, many housing societies nowadays, for the sake of convenience, they form gas banks.
Yeah.
And they provide gas pipelines to all the residential units along with a meter. Based on the consumption, you are being charged for the domestic gas. So you are relieved from procuring gas supplies from the domestic vendors. Now here, what is the role of the housing society? The housing society is not in the business or is not registered as domestic LPG supplier, right?
Okay.
So they are playing as a pure agent. The domestic gas supplier is supplying the cylinders, and basis the units consumed, they are just collecting the money and again paying it to the supplier of the LPG. So
Right.
they are playing as pure agent. Secondly, if there is no such agreement between the residents and the Resident Welfare Association, that the Resident Welfare Association has to provide the gas to all the resident units as a common service, is something different. But in most of the cases, the Resident Welfare Association is only for common area maintenance. Domestic LPG supply is not part of the Resident Welfare Association.
Right.
So in few of the societies, even the domestic LPG supplier directly bill it to the residents.
Right.
And few of the societies, the association bill it to the residents and collect money. Because if a vendor will directly bill to each and every resident and start collecting money, there can be various issues, including security issues and all those issues. So for those purposes, Resident Welfare Association directly bill it to the residents and collect money and pay to the domestic LPG supplier. Again, one more point to be noted here is LPG. Domestic LPG is taxed at the rate of 5%, whereas commercial LPG is taxed at the rate of 18%.
Right.
The reason being, commercial LPG is being used for manufacturing or from production of certain services or goods, and hence there is ITC available to the consumer,
Okay.
and that is why it is taxed at the rate of 18%.
Okay.
Whereas in case of domestic LPG, the government presumes that it is for domestic purpose for self-consumption, where ITC will not be eligible. Hence, they have reduced it in the public interest at the rate of 5%. So in case the Resident Welfare Association is charging GST on the supply of LPG to residents, then they are not eligible for ITC on the procurement of LPG. But my personal view is that there should not be any GST charged by Resident Welfare Association to the residents on domestic LPG.
Okay, you mean that is an extra charge that is laid on the
So RWA is basically acting as a pure agent in this
right.
case.
Okay, thank you, sir. It was pleasure having you with us today, and thank you for sharing your knowledge. Your details we are providing in the description box. If anybody wants to contact sir or any query, please feel free to contact on the given below given details. And I hope you all find this video to be useful. And for further videos, please like, share and comment. And in case of any other topic that you want us to speak on, please mention in the description box so that we come up with a better and contact next time. Thank you.
Jai Hind.
Jai Hind.